Friends, you all know our Saturday webinar series, which is pertaining to company law, FEMA, and other matters, which is more focused on corporate law, company law, and LODR and all that. This webinar series, we specifically work out for CSR and relevant topic. So that's why today the topic is significance of complying with Section 135. Yeah, of course, everyone is concerned. But that significance comes into picture when we refer the subsection 567, because that gives us implications if we don't comply. And that's why to understand significance of compliance of 135, we have to refer that subsection. So we are covering 135, but the focus will be on this subsection and decided cases. And we have today with us our eminent panelists, two panelists, Mr. Amit Vyas,
Hi,
Head Legal and Company Secretary of NOSIL Limited, our very old friend, and we know each other since before his marriage also.
Yeah.
So it's a very long years. Welcome, Amit.
Thanks, Deepti, and thanks to Mehta and Mehta for giving me this opportunity. Great to be reconnecting after years. And it would be a pleasure listening to Sudhakar ji and Garima and share our views and experiences. Thank you so much.
Thanks. So to briefly introduce Mr. Amit Vyas, Mr. Amit Vyas is a Head Legal and Company Secretary of NOSIL Limited. He is a corporate lawyer and group company secretary with expertise and all-round experience in all facets of legal function, including litigation, legal advisory, compliance, corporate governance, with an overall experience of more than 28 years in the having worked with most compliant companies in India, namely Procter & Gamble, SBI Cap, L&T, Greaves Cotton, etc. Spearheaded critical business processes, including building robust risk management frameworks, CSR, sustainability initiatives, including achieving best ESG standards, environment protection standards, industrial relations with unions, and succession planning at managerial levels, competitor analysis, reputation risks, technology upgrade, supply chain risk, cybersecurity, and protection of companies' data. Varied experience, my dear Amit. Litigation exposure includes matters relating to civil, criminal, consumer protection, the antitrust, reputation, arbitration, legal advisory, contract management, competition, prevention of co-employment, POSH, prevention of insider trading, etc. Have a legal journalism as his passion and has contributed to Legal Era, Lex Fitness, Charter Secretary, Business Law Journal, LinkedIn, and other legal journals. Have authored the books on company law and insider trading. Welcome, Mr. Amit Vyas. Thanks a lot for your time.
Thanks. Pleasure joining.
We have with us another our eminent panelist, Ms. Garima Dutt. My friends, her profile is very short, but it has its less words, more weightage. Ms. Garima Dutt, President CSR, Yes Bank Limited and CEO Yes Foundation. Welcome, Ms. Garima, to our forum. Thanks a lot for your time. Thank you. Ms. Garima is a purpose-led leader inspired by the ability of individuals and organizations to make positive contribution to society. A postgraduate from Tata Institute of Social Science and certified sustainability leader from London Business School, Ms. Garima has nearly 20 years of experience across sectors, having worked in positions of increasing responsibility with Tata Motors, Reliance Foundation, and GSK. Ms. Garima now leads CSR at Yes Bank and is the CEO of Yes Foundation. She has varied experience of working closely with communities and social impact organizations and has helped her successfully build and implement business-aligned CSR strategies. With a proven track record of positioning CSR and sustainability as a critical drivers for business and reputation, Ms. Garima look forward to her continued contribution in this space. Welcome, Ms. Garima, to our forum.
Thank you for having And thank you for having me with the distinguished panelists. Thank you.
Thanks a lot for your time. Of course, friends, we have with us our own Mr. Sudhakar Saraswatullah, I hope pronounced properly, our chief consultant, and everyone knows him, but still to formally introduce, he is a member of ICAI, ICSI, and also Institute of Charter Secretary and Administrator UK. He has worked as a Vice President, Corporate Secretary Department of Reliance Industries Limited for 17 years. And everyone knows him, so I'm not further introducing more. And we have with today presenter, Ms. Dolly, who is our in charge of head of CSR department. Thanks all panelists. I'll request Mr. Amit and Ms. Garima to say a few words on the topic, and then Sudhakar, and then Dolly, you can start your presentation. Over to Mr. Amit, please.
Yeah, thank you, Diti. So this has been a very interesting subject, and we have had on-hand experience on CSR as a part of ESG sustainability, and our company won the best ET Legal Award for CSR initiatives, and that award was basically for legal support to CSR initiatives, unique of its kind because it is the first time they introduced that award. Now this award I'll attribute solely to my promoters and my management and the philanthropical approach of our founder. And that is exactly the reason why we are here today. We are one of the best placed in terms of CSR, implemented in letter and spirit. And the experiences that I have in the last 2.5 years are phenomenal. I mean, a lot of time will be taken if I share those experiences, but I'll share that in the course of the presentation. But I must say that now finally, CSR is no longer reckoned as a ticking job by a company secretary or by a compliance professional, but it's more of getting into it in letter and spirit and implementing that in a way that it impacts all of us in a very favorable manner. It is no longer a typical profit-making enterprise and only profits, only PAT, it is something very different which involves all of us. And today in the area of sustainability, ESG, spreading across the entire world as a buzzword, what it was, corporate governance 20 years back is today is ESG and sustainability. I think CSR is a very important component of the same. So I think it's absolutely indispensable, not only from the legal point of view, but even from the conscience point of view. And given the fact that we are trying to implement this in letter and spirit, I hope that we have a good discussion on this. I'll share some of my practical experiences on this. Thank you.
Thank you, Mr. Amit. Yeah, over to Ms. Garima. Thanks.
Yes, hi, good evening, and thank you for having me here. I think in one of the panel discussions, somebody had asked me what superpower I would like. And I had, in light vein, said that I would love to get ahead of the curveballs that CSR amendments throw at us all the time. But I think during this course, I have learned to be best friends with my CS and my finance department. And I see that, most of the fellow panelists as well as the participants are from that background. So I completely echo with Mr. Vyas that this is, it's a beautiful field to be in, right? And the way regulations are shaping, it does not just infuse more money and more funding for, social work and social impact, but also brings around, a strong process, right? And the way it is going, I think monitoring and evaluation, everything is going to become stronger. But during this course, I'm a strong believer that in chasing numbers, one should not lose depth and impact. And hopefully we are on the way to find the right balance for each. So I'm excited to be here, and I would also share my experiences as and when required. Thank you.
Thank you, Ms. Garima. Mr. Sudhakar, and then we can start, and you can see the interest of the participant looking at the number. Thanks. Yeah,
Thanks very much. Thanks, Dipti, and good evening, everyone. And good to see you, Amit, after a long time, as we were discussing about that. And I remember the good olden days. And having said that, now as far as the corporate social responsibility is concerned, this is one of the sections of Companies Act 2013, which has gained a lot of prominence of late. In fact, in the initial phase, the interpretation was that comply or explain approach. And ministry has clarified and several times that this was not the intention of the ministry at all. And that is the reason actually in 2016 and 17, if we remember that every company virtually has received the show cause notices that why they have not spent the money. We were interpreting at that point of time whether you spend the money, if you are not spending the money, just give the reason for that in the board's report. So most of the companies, they were doing that, explaining the reason in the board's report. So the regulator got very much cheesed off. And if you remember that in Companies Amendment Act 2019, they went to this extreme of stipulating some penal provisions. And okay, that in fact, rather they made, let me put it, that imprisonment was also there. But subsequently, fortunately, that section was not notified, and ultimately there was a lot of hue and cry in the Companies Amendment Act 2020. That section was withdrawn. But one thing definitely is there. Wherever I go and whenever I talk in any forums, I say in the Companies Act 2013, there were three major important sections. One is section 188, another one is section 90, and the third section is 135. No company secretary should take this particular section, especially corporate social responsibility, very lightly. In fact, Dolly is going to give us 3-4 case laws, which in fact signifies the importance of section 135, especially subsection 5 and 6. I give a pause here and then over her presentation, and wherever I have to step in, I will do that. Thank you very much.
Thank you. Ms. Dolly, you can start your presentation, start sharing the screen. Friends, as usual, please put your questions in the chat box. The same will be answered wherever convenient. And if possible, time permits, at the end of the webinar, we will allow the person, if time permits, who raised the hand to speak. Thank you.
Yeah.
The
So-
question is already started, huh? Yeah, okay.
Yes. So good evening, everyone. I welcome Amit sir and Garima madam for this webinar, and looking forward for your valuable inputs. So to start with, our focus area today is significance of complying with the section 135. As Sudhakar sir has mentioned that why it is so important for a company, and specifically for the company secretary, CFO, and all the KMPs to comply with the section 135. So yeah, so today in this webinar we have covered the topic starting from the very basic about the CSR, and then we are going to look at the definitions given under the Rule 2. Then we will understand the responsibilities and the role of the CSR committee and the board, and we will have a quick overview about the section 135, and thereafter we will discuss the penalty and the case studies. So moving onward, so India is the first country to legislate the need to undertake the CSR activities mandatorily. Yeah, just a second. Yeah, and mandatorily report CSR initiatives under the new Companies Act 2013. It's a legal responsibility that cast upon a corporate body to report, to address the socio-economical and the environmental issues. CSR in India has evolved through the different phases. Like, first of all, it was a community engagement, then it was a socially responsible production, and socially responsible employee relations. So in the history of the India, there were many corporates who were doing the dan dharma and seva and the zakat. So in many in the religion also, the social do something for the social cause has an importance. So Indian traditions have given a lot of importance to the charitable and philanthropic activities. However, charity and philanthropy is not a CSR, as they may be a one-time activity, and long-term commitment may or not be there. So basically, it's a long-time and structured commitment towards the development of the society and its welfare. Thereafter, in Companies Act 2013, in the section 135 got introduced, which is talking about the CSR, and also Companies Act has introduced the company's CSR policy rules 2014 and Schedule 7, which contains a list of activities to be considered as a CSR activity. Thereafter, there are several development in the CSR in terms of the amendment. in 2017, there was an amendment, Companies Act Amendment Act 2017, in which earlier, in the subsection 1 of section 135, for the CSR applicability, the word was there any financial year, which got replaced with the immediately preceding financial year to check the applicability of the CSR. Thereafter, in 2019, Companies Amendment Act, under that, there was an insertion of the provision of subsection 6, which is talking about the ongoing project. So any amount remaining unspent under the subsection 5 pertaining to ongoing project, the company has to transfer within given the timeline. And also in the same Amendment Act, there was an introduction of the penalty as per the subsection 7 of section 135. And moving onward, in the year 2020, Companies Amendment Act 2020, which again inserted two provisions. First was about the set of provision, and also they have inserted the provision of the formation of the CSR committee. And also the penalty provision of subsection 7, it got increased. That we will see later on in this webinar. Yeah. So far, any panelist would like to add anything here?
Yeah, I would just like to add that the CSR, the father of CSR in modern Indian business was Dr. Bhaskar Chatterjee. And he was a person who was instrumental in framing and issuing the CSR guidelines for the public sector enterprises way back in 2010. And basis his recommendations, finally we got section 135 in the year 2013. So just for a recap, I mean, he was a guy who actually activated CSR as a concept in India.
Thank you for input, Mr. Yeah. No.
So so first we will look at the Rule 2 definitions of this for the CSR. What CSR means: corporate social responsibility means the activities undertaken by a company in pursuance of its statutory obligation laid down in section 135. So first point is talking about there were certain provisions introduced in the COVID time, which is not having any impact, this first point. So we can move forward. The second point is talking about any activity undertaken by the company outside India, except for training of Indian sports personnel representing any state or union territory at national level or India at international level. So basically, this definition is talking about what should be not included or not considered as a CSR. So when we talk about any activities undertaken by the company outside India, it won't get considered as a CSR, except if the company is providing CSR funding for the training of Indian sports personnel representing state or union territory at national level or at international level, it can get considered as CSR. Then contribution of any amount directly or indirectly to any political party under section 182 of the Act, activities benefiting employees of the company, activities supported by the companies on sponsorship basis for deriving marketing benefits, activity carried out for fulfillment of any other statutory obligation under any law in the force in India. So all these activities, So all these activities won't get considered as a CSR as per the this definition. Then there is a definition for the CSR policy, which means a statement containing the approach and direction given by the board of a company, taking into account the recommendations of its CSR committee. And it includes the guiding principles for selection, implementation, and monitoring of activities. Also, it includes formulation of annual action plan. Then there is another definition for the ongoing project, which means multi-year project undertaken by a company in fulfillment of its CSR obligation, having timelines not exceeding 3 years, excluding the financial year in which it was commenced, and shall include such project that was initially not approved as a multi-year project, but whose duration has been extended beyond 1 year by the board based on the reasonable justification. Then this is a very important, to understand here what are the responsibilities of the board in relation to the CSR provisions. So it is given under the FAQ 2.3, which is issued by the via General Circular of 2021. CSR is a board-driven process. The responsibilities of the board of a CSR eligible company include the following: approve the CSR policy, disclose the content of such policy in its report, and also place it on the company's website. Ensure that the activities included in the CSR policy are undertaken by the company. Ensure that the company spends in every financial year at least 2% of the average net profit of the company made during the 3 immediately preceding financial years. Satisfy itself regarding the utilization of the disbursed CSR funds. And if the company fails to spend at least 2% of the average net profit of the company, the board shall, in its report, as mentioned under subsection 3 of section 134, specify the reasons for not spending the amount and transfer the unspent CSR amount as per the provisions given under section 135, subsection 5 and 6. Now we will start with the section 135, corporate social responsibility. Subsection 1 talks about the applicability of the CSR. So every company having net worth of rupees 500 crore or more, or turnover of rupees 1000 crore or more, or net profit of rupees 5 crore or more during the immediately preceding financial year shall constitute a CSR committee of the board consisting of 3 or more directors, out of which at least 1 director shall be an independent director. In case of companies not required to appoint an independent director, it shall constitute its CSR committee consisting of 2 or more directors. So here, as we can see, the CSR is applicable to all the company, whether it can be any form of the company, private, public, Section 8 company. Yeah, as per the Rule 3 of the CSR rules, it talks about every company, including its holding or subsidiary and a foreign company, having its branch office or project office in India, which fulfills the criteria as specified in the subsection 1 of the section 135. In case of a foreign company, net worth, turnover, or net profit shall be computed in accordance with the balance sheet and P&L of such company prepared in accordance with the provisions of section 381 and section 198 of the Act. So here, if a company, including its holding and subsidiary and foreign company, if they have the branch office or project office in India, and they also fulfill the criteria given under the subsection 1 of the section 135, the CSR is applicable to that company. Then subsection 2.3 talks about the roles and responsibilities of CSR committee. Subsection 2 talks about disclose the composition of CSR committee in the board's report. Subsection 3 talks about the CSR committee shall formulate and recommend to the board a corporate social responsibility policy, which shall indicate the activities to be undertaken by the company in areas or subjects specified in Schedule 7. Recommend the amount of expenditure to be incurred on the CSR activities every year, and monitor the corporate social responsibility policy of the company from time to time. Subsection 9 talks about where the amount spent by the company on CSR does not exceed rupees 50 lakhs, CSR committee need not to be constituted. Then subsection 4 talks about the board of every company shall consider the recommendations of the CSR committee and approve the CSR policy, disclose the contents of such policy in its report and also place on the website, ensure that the activities are included as are included in the CSR policy of the company. So basically, whatever inclusion is there in the CSR policy, the company has to consider the activity in that line. Then there is a very important subsection of section 135, subsection 5, which talks about the CSR.
In fact, Dolly, one minute. See that, in fact, that it is the responsibility of the CSR committee as well as of the board to discharge the CSR obligations. And especially in case of CSR committee, they have to monitor the utilization of funds also. That is the reason, in fact, wherever the company secretaries are there, they have to sensitize the CSR committee members as well as the chairman of the CSR committee. Their role is much bigger than the role of the board as far as the CSR expenditure is concerned. They are the people who have to recommend to the board how much is the money to be spent. And similarly, they are the people who have to formulate the CSR policy. They are the people who have to recommend the CSR activities or ongoing projects which are covered under Schedule 7. So, and similarly, they have to ensure that the money is spent properly. At the same point of time, they have to also ensure that the CSR projects are being monitored closely. So the responsibility of the CSR committee is much larger than the responsibility of the board as such for this particular section 135. So it is the responsibility of the company secretaries to sensitize the CSR committee towards this. Yeah.
I agree, Sudhakar. In fact, the company secretary nowadays has a very critical role because apart from guiding the CSR committee, fixing up their agendas and particularly monitoring of the projects which are there, to what extent have they fulfilled the objectives, to what extent have they spent the funds, deployed the funds or not. Because at the end of the financial year, suddenly you have the question that whether the NGOs or the implementing agencies have deployed all the funds that have contributed or not. Because the clarification from the ministry very clearly says it's not just spending the amount or remitting the amount, but it's actually spending by that particular NGO on the objective which is critical for the compliance. So I think company secretary being a compliance head, the major role to play, and I think CSR committee is largely guided by the proactive initiatives of the company secretary. So we have a big role there.
Yeah. So yeah. So subsection 5 of the section 135 says the board of every company shall ensure that the company spends in every financial year at least 2% of the average net profit of the company made during the 3 immediately preceding financial years in pursuance of its CSR policy. Where the company has not completed the period of 3 financial years since its incorporation, during such immediately okay, then they have to consider the immediately financial years to check the applicability. Company shall give preference to the local area and areas around it where it operates for spending the amount earmarked for CSR activities. If a company fails to spend such amount, the board shall, in its report made under subsection 3 of section 134, specify the reasons for not spending the amount.
Only 1 minute. The second bullet, where the just go back, Dolly, for a moment. The second bullet where it says that where the company has not completed the period of financial years since its incorporation during such immediately preceding financial years. In fact, prior to this, if I am not wrong, this is an amendment which has come in the 2017 or 2019 Amendment Act. Prior to that, we used to interpret that if the company has not completed 3 financial years, means there is no need to spend the money. Subsequently, it has been clarified that if the company has not completed 3 financial years during such immediately preceding financial years, means if it is 2 financial years is there, you have to average it out for 2. If you have only 1 financial year, whatever the profit is there, of that 2% you have to. That's how this is to be read as.
Yeah.
Amit, if you would like to throw some light on this also.
No, I fully agree with your interpretation, Sudhakar. The only thing is that, this particular stipulation that company will give preference to local area and areas around it. I think they have diluted this and they have very clearly specified that it's up to the company, because there's so many areas in India which are very, very backward. And see, if we are operating in a place like Maharashtra or Gujarat, where there is a lot of development, the provision should not stop you from investing in Chhattisgarh or in a remote town or place in India. So I think they have diluted this a bit by saying that it's a voluntary, it's up to the company to decide on whether you should contribute to the local area or whether it should be throughout India. In fact, for the recent amendment where the BRSR, the sustainability report that companies are supposed to file, it now captures a particular column that, whether your NGOs have actually worked in those specified backward areas which they have listed. So that also is mandatory now.
Yeah. So moving onwards, subsection 5 also talks about the unspent or excess of, CSR obligation. So first we'll see transfer of unspent amount. Subsection 5 talks about for the projects other than the ongoing project, the company has to transfer the unspent amount pertaining to other than ongoing project within 6 months from the financial year end. They have to transfer the specified fund under Schedule 7. There are 5 funds are given. Prime Minister's National Relief Fund, PM CARES Fund, Clean Ganga Fund set up by central government for rejuvenation of River Ganga, Swachh Bharat Kosh set up by central government for promotion of sanitation. Then subsection 5 and Rule 7.3 talks about excess amount spent. In case the company spends on CSR activities in excess of its obligation of 2% of average net profit for 3 years, then the company can take set off of such excess spend against the obligation to spend in immediate succeeding 3 financial years, subject to following 2 conditions. The excess amount available for set off shall not include the surplus arising out of the CSR activities. And the board is required to pass the resolution for this effect.
In fact, recently I have come across one question in some of the WhatsApp groups, wherein somebody has questioned that the set-off of the excess amount spent is concerned, whether I can set off the thing only when there is a deficiency of profits for next year or a lack of liquidity, or I can do it at any point of time. So here the answer to that is, it is up to the company to set off this particular excess expenditure. There is only 3 financial years are there. Now suppose another question may come up, is that in the next 3 financial years, I am not having any profits. Or let me put it this way, I don't have any kind of CSR obligation. Can I set off in the 4th financial year? Answer is no. You can set off only in the next 3 financial years. But for any reason, if you don't have any kind of obligation of 2% average profits and all those things, then you cannot set off in the 4th financial year. That excess amount gets lapsed.
Yeah, perfect.
Amit or Garima, if you would like to say something.
Yeah,
Yes.
I agree with you.
Sorry, go ahead, Amit.
Yeah, no, I fully agree with Sudhakar. It's a good interpretation. Very finer point he has brought out.
Yeah, so there are some questions even on the chat pertaining to this slide. I was wondering if you would want to take it towards the end or you want to take it now. Like there is a question that if the annual action plan also had an ongoing project, but they didn't spend anything. So in unspent CSR account, how much money would go? Would it be the excess or what was the applicable? So in my interpretation, what is applicable is what has to be transferred to the unspent CSR amount. But Sudhakar ji and Amit ji, most welcome to add on.
Yeah, I think the entire amount has to be transferred because the company has defaulted it. They have not spent any amount towards the CSR obligation for the year. They'll have to transfer the amount.
Sudhakar, what is your suggestion? We'll take parallel question because there is many specific questions.
I think Deepti, that whatever the questions are there in the chat box at this point of time, please take it up. And
Okay.
then we will move further. So otherwise, what will happen sometimes if the presenter is only talking, it may become a monologue also. So better you take up the questions now.
Okay. A company is acquired under IBC by company B. As per resolution plan approved, loans have been waived off by NCLT. And the same has been written back in profit and loss account of the company, due to which the profit in the profit and loss account has been increased. And because of such exceptional item, whether such can be considered under section 135, 198. So return back of loss due to resolution plan. So the profit will be high, whether this will be considered for CSR.
We have to get into the intricacies of section 198, the profit that is calculated under section 198. Have to be an accounting.
Yeah,
See, on the face of it, I can say that 198, if I'm not wrong, it has excluded all the exceptional items, whether it is the income or expenditure. So on the face of it, we can say that that is not to be included, but at the same point of time, it is always advisable before you are arriving at the amount to be spent to go through that 198 minutely.
Yeah.
then any example of indirect contribution under section 182? I think we have not come that, it is not relevant at this stage, right? Sudhakar, you would like to take this question? Any example of indirect contribution under section 182? It's not,
The 182, if I'm not wrong, it is the contribution for the political parties. Am I correct?
Yes, and it's not
Yes,
It's not-
yes, sir.
that for
Yeah.
sure.
So any kind of contribution to the political parties, that is not a part of CSR. See, in fact, several times one more question also comes is, of course, Dolly, though she has clarified in the beginning itself, that you have to say very clearly that whatever the CSR activities are there, they have to fall under the definition, schedule 7. Though there was a circular from the Ministry of Corporate Affairs that you have to liberally interpret those activities. But please remember that when the moment you use the word charity or philanthropy, that is not a part of CSR. So any kind of charitable activities that are philanthropic activities, they will never fall unless until they are covered under Schedule 7. So you have to be very clear about that. Whether there is no point of asking anybody whether this falls, that falls, and all those things. And at the same point of time, that ministry has allowed you to take a liberal interpretation. That doesn't mean try to accommodate everything and anything, even if it is a charitable activity also under the part of CSR, because ministry is very clear about that. And they are thinking that corporates are not discharging their social responsibilities the way their ministry is expecting them to do that. So my humble submission to all the company secretaries is, whenever you are facing any kind of clarifications as far as section 135 is concerned, please go through the rules, because rules have been completely rehashed, I think effective 22nd January 2021. In addition to that, there are FAQs of the Institute of Company Secretaries, FAQs of the ministry also are there. Please read in a holistic manner before you implementing that. At the same point of time, another humble submission is, please don't depend upon the WhatsApp universities to get clarifications. And as an SSB member, let me also take a liberty of requesting everyone to kindly go through the guidance note on CSR, a revised guidance note rather it is, and it is very comprehensively covered lot many questions what the company secretaries face in the guidance note. Thank you.
Sudhakar will soon have a secretarial standard on CSR. Should have it. As a part of secretarial standards board, you must drive that.
Yeah, we will do that. Yes.
And I like to, bounce off there that while Schedule 7 may be liberally, interpreted, exclusions are not to be liberally interpreted. They are very, very, I think, straightforward, and donation to political party, which is pertaining to this question, is clearly an exclusion. So that's not permissible.
Yeah.
Very relevant point, Garima. You touch that now.
pointed.
You touch the sensitive now.
Yeah, there is a question. Can you please also throw some light on obligations on entity receiving the CSR funding? Surely we have already taken webinars. We will take it not in this, but surely.
This is okay. Just to say that, if I'm not wrong, they're talking about the implementing agency. That means the agency what is receiving CSR funding. Please remember that that implementing agency is nothing but your extended arm. So whatever your responsibilities are there, they are the responsibilities of the company or the implementing agency, whatever it is receiving the CSR funding. Please remember that primary responsibility is of yours only. Another question comes quite often is that I have given the money to my implementing agency, but they have not spent the money. Why I have to be held responsible for that? You are the principal and the implementing agency is only your agent. By delegating your responsibility, you cannot abdicate the responsibility. Hence, at the end of the day, you are responsible for everything. That is the reason why the rules and section has been stipulated the responsibility on the CSR committee to monitor the CSR projects. Wherever I train the directors and especially independent directors who are members of the CSR committee, I always advise them, please go to the please visit the CSR sites. Don't just depend upon whatever the information being furnished by the management to you. Yeah, Amit.
Ministry has also clarified that, where disbursement of the fund to the NGO or the implementing agency is not sufficient, you have to take extraordinary steps to ensure that they have actually deployed the funds and utilize the funds. And that's why, I think the Institute of Chartered Accountants has issued a clarification that they must get an independent auditor certificate. And then the board has to take a call that, yes, the funds have been deployed. The CFO is also supposed to give a compliance certificate at that meeting when the director's report is taken up that the company has ensured that all the funds have been deployed towards the objectives. So I think it's a very onerous responsibility.
Okay, next question is, if CSR spend is not more than 50 lakh, then CSR committee is not required to constitute. But whether the company is still liable to spend the CSR amount.
Yes.
Yes, absolutely.
Next question, could you kindly elaborate the sentence express excess amount available for set off shall not include the surplus arising out of CST activity, CSR?
Yeah. I can take this question.
Yeah, please.
So I think surplus, I'll give you an example. For example, if you're running a mobile medical unit and you are charging patients, say 5 rupees for, the entire process, and that 5 rupees also is like an income to that project, right? So when you say excess amount, it cannot include that surplus which is arising out of the CSR activity, or you've created a capital asset and you've sold it off the organization that you're implementing through, and then they've got money, but that cannot be the excess spend. So excess amount is if your applicability is 10 crores and you've spent 15 crores, then 5 crores is excess. That's as simple as that. This 15 crores has to be actually spent. It cannot be the surplus arising out of whatever activity you have.
Could you please elaborate on unspent amount on ongoing project?
We have to speak about the provision, or
I don't know. Could you please elaborate
that-
on?
Say that, several times what happens is ongoing project, which may be 3 + 1 years, it is in the 4 years you have to complete the ongoing project. It so happened that in the first year itself, when you have decided the ongoing project in the first year, suppose, say, for example, you are supposed to spend 5 crore rupees, and that 5 crore rupees requirement might not be there in the year 1. Say, for example, I'm setting up a school, I'm constructing a school. For that, I need to acquire the land. That project is, say, for example, I have decided it is an ongoing project. And unless until I acquire the land, I will not be able to construct the building. And somehow I could not manage to acquire that particular land in the first year itself. So what will happen by end of the financial year, I might be having that unspent amount. If it is an ongoing project, within 30 days of the closure of the financial year, I have to put that money into a separate bank account as unspent CSR account for the financial year so and so and all. That is what the treatment to be given on unspent amount for the ongoing project.
There are lots, I agree. Sudhakar, lots of such instances where we have faced that, somebody comes up in the month of, say, January and says that, we are setting up a school or a dispensary in a remote area. And then that takes its own time. It cannot happen by 31st March. So ultimately, the board has to treat that and pass a resolution that there's an ongoing project.
Okay, thanks. Next question, if board approves CSR amount in excess of mandatory obligation, is the company required to transfer the whole approved CSR amount to separate CSR bank account or only the mandatory amount?
Question is very similar to the first one, actually. If it's unspent, the obligation has to be transferred.
can you explain on timing on utilization of fund by NGO?
31st March. This has been a pain point, honestly, even for CSR professionals as well as NGO professionals. It effectively gives them about 9 months by the time actual amount comes and the money is transferred, MOUs are signed. This is the pain point, but there have been a lot of submissions from the ecosystem to the government to reconsider this. But as of now, 31st March, yes, the utilization has to be within that.
So it has become so routine that when you contribute funds, you take a declaration that you'll be able to, spend this entire amount by 31st March. And they all give declarations, and they also give a CA certificate, whether they've actually deployed or not. It basically depends on your, inspections and audits. But then that's a huge function because you have to go by the certification. It's quite possible in many cases that the entire amount has not been deployed by 31st March. But then you have to rely on the CA certificate unless you go out of the way to check that. Which is, I
Sometimes,
think,
Amit, this kind of questions also came that, look, I have placed the orders, the material was in transit, the material was not reached before 31st March. What I have to do, I have paid the money, but material has not reached and it could not be, say, for example, the building could not be painted, that kind of work could not be completed. See, whenever such kind of situations arise, at the end of the what you need to do is what is your conscience says. Are you really done that your part? Or you're trying to give a color to that? Say, for example, you have to say, I have given the order, I have paid the money, but the material has not reached. If it is a real, genuine case, then one can take out. But if you're trying to give a color that you're not spent the money, but you're trying to show it as if you have spent the money, you will be in trouble for that. So these kind of questions, whenever you are seeking the clarifications, nobody can give you a clear-cut answer. At the end of the day, you should be very careful because ministry is very clear by 31st of March, you are supposed to spend the money.
correct. Yes.
Spending the money means what? By merely giving it to the vendor to supply the material, or the material has to reach you, or you have to utilize the material. These kind of answers nobody can give you, but one thing is definitely there. On a conservative interpretation, you have to ensure that the project or the activities, whatever you have taken up, they are completed by 31st of March. Then
Yes.
only you will be safe, otherwise you may invite trouble.
What should be the accounting treatment of excess amounts spent? Accounting treatment of excess amount spent.
You show it as an asset to you. You can adjust it against the future liabilities.
Yeah,
You
Ms.
don't need to show it you don't need to show it in the P&L account. Whatever your CSR obligation is there, you show it in the P&L account, and whatever the excess amount spent, you show it as an asset. Okay, advances given in kind or in cash, whatever it is and all, and after that next year when you adjust it, you nullify that account.
But in any case, it will not be allowed as an expenditure, business expenditure.
Absolutely correct.
Next question is addressed to Ms. Garima. It's a clarification they are asking that question of board approved the CSR amount more than mandatory and whether they have to transfer. So she's clarifying that you are telling that only mandatory amount balance you have to transfer and not what board has approved balance amount. So she is telling is that you are of the view that only the minimum required amount is to be transferred and not the excess amount over and above such minimum required amount, even though same has been approved by the board under CSR action plan.
Yes. So earlier she has written that the excess amount is for an ongoing project, right? So ongoing can be for 3 years, right? So you don't, if in that year 10 crores was a liability and they've not spent 10 crores, and in the approvals they had said that, okay, 10 crores we will spend so and so, but additional 1 crore for an ongoing project, but amount that has to be transferred will be 10 crores. It is best if you also get absolutely for clarity, a board resolution also passed towards this effect, right? And mention it in the CSR committee and the board, and then get that. So yes, I am of that view, and Amit and Sudhakar can also put that.
No, I concur absolutely with you.
Suppose, for example, these are not an ongoing project, some CSR activity which are to be completed within the financial year itself. In such case, the obligation Yeah, the obligation of the company is say about 2 crore rupees. But the board has approved, the CSR committee has recommended, and the board has approved to spend 2.5 crores. But at the end of the year, they have not spent any amount. In such case, what if it is not an ongoing project? The entire 2.5 crores, you don't need to transfer to a specified fund. Whatever your obligation is there, that is rupees 2 crores, you have to transfer only that much money.
Okay, thank you. That clarified the situation. I hope Ms. Rima it is clarified. Now, next question by Mr. Arun. Please tell regarding unspent amount in case of state government and public sector undertaking and government companies. Now, in this case, if they are they have their sectors, unit specific act and specific act, then you have to see that LODR, Companies Act, and if there is any specific provision. Either panelist has to say anything. Because if
Companies
there-
Act covers all companies, incorporated under the Companies Act, you are supposed to comply.
Yeah, but if in addition something is more there in government, their own act, specific act, that they have to check.
See, the state government law, even if it is there, it cannot override the Companies Act, which is a central legislation. So there have been so many cases where independent directors were not appointed by PSUs. They were all identified.
Yeah.
Questions were raised in the parliament on that, and they had no answers because the ministry was not acting on that. But then there is, there is definitely a non-compliance.
Yeah, we have also qualified that way, but I said that if there is more stringent requirement in there, if that, we don't know, it's a very generic, so they have to follow that also. But Companies Act, of course, they have to follow, right?
Yeah.
Yeah. Mr. Ravi, in cases of CSR projects involving NGOs, some companies issue PO fire CSR projects and expects NGO to spend this money first, complete and report the project extensively, and then disburse the CSR funds as per the project expense approved by the company, its auditors at the end of the year. Will this called a CSR project at all? Any idea? Through some light, please.
It's definitely not a good way to treat your partner or your funds. So, but strictly speaking, in definition, that is really based on the agreement that you and the NGO have. So if it is in the MOU that this is how you're going to treat, like you've said that after the milestone is achieved, the payment release will be after the milestone is achieved or after the project is completed, then that's an agreement between, it can still be CSR funds, yes.
Mr. Amit, you would like to say something?
No, I'm in agreement with her viewpoint.
I know. Do you agree with the fact that too much details have been asked for under CSR2 form for submission to ROC, particularly when details are included in the director's report?
It's okay. Nowadays, everything is digitalized. So what is the harm in submitting the same information with the ROC?
Please take session on section 198. Sure.
If you see the CSR2 form, they are not asked too many details. It helps the regulator. In fact, what the company is supposed to do, you have to reflect in the CSR2 form. How much money you are supposed to spend? Is it an ongoing project? How much you are transferred to the specified funds? All those things they are asking. It is virtually a scanning of it is a scanning report.
Correct, yeah.
So if you give it based on that, the regulator is going to review your company's performance, and accordingly he will take up your case, whether it is to be penalized or not to be penalized or whatever it is. I couldn't find in CSR2 form any excess details the regulator is asking us.
Correct, yeah.
Please take session on section 198. That will be covered in our Saturday webinar surely. Interest income also excess amount. What is role of social auditor, social impact assessor? I think that is, we will take it separately, not in this.
Impact assessment is only for the 10 crores when the average annual spending.
Yeah. No, they are asking role, but we can't explain role. That is a separate session we will do.
That is a concept yet to take place fully in India. Social audit and impact assessment is definitely going to be there another 4-5 years down the line.
Yes. Amount paid to implementing agency in March 2024 should be spent in March 24 itself to qualify for CSR for financial year 23-24.
Yes.
Yes, yes, yeah.
I have query about CSR net profit calculation. I have a foreign subsidiary private limited company in India. In financial year 2023-24, we got operating profit from our normal manufacturing business, that is 2.5 crore. And also our books of account showing rupees 3.5 crore profit from foreign exchange rate fluctuation. That is ECB outstanding reinstatement as on 31st March 2024. So now this has crossed the 5 crore net profit limit of CSR applicability. Please guide me whether CSR is applicable or not. So it's basically exchange fluctuation, and that's why their profit is there. Again, do you think it's exceptional under 198?
If it is
Here
reflected in
this
the audited
question is
accounts, it is
not
captured.
about section 198. Yeah, Amit, go ahead.
I was saying that if it is captured in the audited accounts, despite the fluctuation of whatever it is, if it is reflected in the financial statements audited as on 31st March, then definitely we have to look at it. And then we apply a section 198 and dissection of section 198.
Absolutely correct. See, as far as the trigger point of section 135(1) is concerned, they said about net profit as per the financial statements.
Correct,
So
correct.
there is here, if this question is there, they are talking about that only. So net profit, whether fluctuation exchange reserve is there or not there, whatever it is and all, as Amit has rightly mentioned, you have to take your audited financial statements. Then the question comes about 2% of the expenditure and all. There you have to see as per section 198, you have to compute that, calculate the profit there.
Now, Mr. Ravi Kumar has continued his question that is regarding that, when CSR, they have been instructed to spend in the way approved by the company. He has extended and he has asked the question that what if money has already been given to NGO as CSR and unspent money should be taken back in April from NGO and put it into unspent account?
Yes, within 30 days.
Can
So-
a
See, Dipti, 1 minute. Amit, you would like to say something? Otherwise, I will say a few words.
No, I think that's a very pertinent final question that, see, if you have committed, you have deployed, you have disbursed that fund and the NGO has failed and that you have to transfer that amount to the unspent CSR account, then the agreement with the NGO or the implementing agency should be very clear that you need to take the refund. Even if that agency does not refund you back, you still have an obligation to transfer that amount, which is unpaid to the unspent CSR account.
Perfect. That is the answer. That is the answer. Whether you recover that amount or not, it is immaterial. If it is an ongoing project, within 30 days, you have to transfer the money. Otherwise, within 6 months, you have to transfer to the specified fund.
Correct.
Whether you recover that from the NGO or not, that is your internal dispute.
Yeah.
You go to the court, do whatever you want to do it, but you have to discharge your legal obligation under section 135.
Yes, yes.
Correct.
Yes,
Yeah.
and I'd like to add on, earlier actually you could write a check on March 31st and that would be considered as spent. But after the 2021 amendment, it has to be utilized. And that's why I think all these, our answer is so straightforward that yes, it has to be transferred to unspent account, yes.
See, earlier there was a concept of corpus fund. That corpus fund concept has been removed
Yes.
with the rules were
Yeah.
amended after section 20. The 22nd January 2021. Now what they say is, forget about the corpus fund. What you have to do is, if any unspent money is there, if it is an ongoing project, within 30 days transfer to a separate bank account. Otherwise, within 6 months transfer to the specified fund account. Simple. No corpus, nothing.
No.
Correct, correct, yeah.
Can a certified social impact assessor, NISM certification, be part of CSR committee?
Only board committee. It is a board committee. Nobody else can be. If he is
Yeah.
a part of the board member, then yes. Otherwise, no.
Okay, so it says नमस्ते महोदय, हम लोग 2018 नाबार्ड के साथ काम कर रहे हैं, जिससे हम लोग महिलाओं की 250 SHG बना चुके हैं. उनको लोगों को कौशल बहुत अधिक अवसर है, जिसे वो लोग घर बैठकर अपना व्यवसाय कर सकें. आपको CSR fund के माध्यम से मदद मिलेगी. I think this is just an opinion, it's not a question.
No, no, not opinion, rather, I think he's from NGO and he's asking that it can be helpful to the ladies, I think, that way.
Yeah. So any organization that has entrepreneurship, जिस भी organization का entrepreneurship या औरतों के livelihood, उनका आमदनी का है, तो वो ये रूट ले सकते हैं. बहुत लोग लेते भी हैं क्योंकि गांव में महिलाओं का संगठन बना के उनको व्यवसाय का मौका देने का ये है CSR के अंडर है.
Thank you, Ms. Garima. Ms. Isha, can we spend basis unaudited figures and then pass a resolution when financial statement is finalized? If we need to spend more basis the audited figures, what is the question? Can we spend basis unaudited figures and then pass a resolution when the financial statement is finalized?
Let me take this, Deepti. So we do exactly this to avoid that NGOs are left only with 9 months. We take approval for a CSR budget and an annual action plan in February meeting itself, right? So that we can start the projects on 1st April. But we have a caveat saying that once the actual books of accounts are closed and we have the real applicability, then we will put the final annual action plan to be put on the website, etc. But otherwise, because Q4, you are always sort of extrapolating what your profits might look like. And but it can be done, yes, as long as you actually in the future meeting, if there is any adjustment or if there is any change in the actual applicability, that you adjust for it.
Is losses incurred?
Absolutely right approach.
Yeah,
This is the right approach.
at the end of the year complaint. Is loss incurred due to updation of technology is allowed as deductible expenditure under section 198? अभी 198 लेना ही पड़ेगा. Yeah, exceptional item. Now, could you please throw some light on ATG certificate by when it need to be issued?
Ideally, when you receive the funds, and definitely after the organization has filed the 10B and given the certificate. But when you get the money, you issue the receipt, you should issue the ATG.
Registered society or a trust, I think, and then they qualify for the ATG.
Yeah, and correct me if I'm wrong, it also depends on which regime the company has accepted. If they've accepted the new regime, any which ways they cannot, they will not ask for ATG because it wouldn't matter. Correct.
Okay, whether government can ask for laying rural roads under CSR?
Should be covered in Schedule 7, I think.
Yeah, but the question, Amit, is whether government can ask. You know that there are, certain places the state authorities writing the letter and all that issue.
No, unless they issue a notification saying that yes, this will be entitled, this will be treated as a CSR expenditure under Companies Act. I think that just a request or this thing is a very different.
It is a request actually.
No, that won't.
Okay, Chero. In case the company transfers the excess amount over and above the minimum obligation in a separate unspent CSR account for ongoing project, and after 3 years, if the amount remains unspent towards such project, the obligation of the company to transfer the amount to the specified designated funds is only up to the minimum obligation amount, and any excess amount transferred to unspent account can be transferred back to the company's business account. So the same, Ms. Garima, what you answered. Now the action was already taken, CS transfer extra money only. Now see, since you said it is minimum, whether she can take back to business account now.
See, Deepti, there are actually now Dolly is going to touch that subject, section 5 and subsection 6 and all. That is, I think, going to throw some light on this question. So
Okay.
park this question and then park the other questions also. Let Dolly start.
Yeah,
with it.
this
I
is
was about to say that.
admin expenses of implementing partner is project expense or administrative expense?
any admin expenses of the implementing partner is a program expense for a company, because definition of administrative overheads is salary of
Right.
CSR. So that is not included.
It is not included here.
Yeah.
That is not included.
That clarification had come very clearly earlier. That was what was very disturbing, that, how can most organizations limit their administration to 5%? But now that has been clarified.
Correct. Yeah. It's very clearly clarified by the ministry.
Okay, yeah, thanks. Darling, you can start.
Okay. Yeah. So subsection 6 talks about the unspent amount for ongoing project. So any unspent amount remaining, at the end of the year, the pertaining to ongoing project, the company shall be company has to transfer within a period of 30 days from the end of the financial year. Such transfer shall take place to a special account to be opened by the company in that behalf for the financial year, with any scheduled bank to be called as unspent CSR account. The company to spend such amount within a period of 3 financial years from the date of the transfer. After 3 financial years, if any amount remains unspent, the same need to be transferred to a fund specified in Schedule 7. The 5 funds which we have discussed, before, within a period of 30 days from the date of completion of the 3rd financial year. Thereafter, section 135 subsection 7 talks about the penalty provisions. If a company is in default in complying with the provisions of subsection 5 or subsection 6, this is just now we have discussed about the CSR obligation and also about the transfer of unspent amount. The company shall be liable to a penalty of twice the amount required to be transferred by the company to the fund specified in Schedule 7 or the unspent CSR account, as the case may be, or 1 crore rupees, whichever is less. And every officer of the company who is in default shall be liable to a penalty of 1/10 of the amount required to be transferred by the company to such fund specified in Schedule 7 or the unspent CSR account, as the case may be, or 2 lakh rupees, whichever is less. So basically here the liability is on the company as well as every officer. Here every officer means officer is in the default. Moving onwards, as we have seen just now, that subsection 7 is talking about the penalty for the subsection 5 or subsection 6 non-compliance. So if there are any other non-compliance of the section 135 other than the subsection 5 and 6, in that case, the provisions of section 134 subsection 8 or general penalty under section 450 of the Act will be applicable. Further, in case of non-payment of penalty within stipulated period, the provisions of section 454 subsection 8 will be applicable. So far we have, we have seen the section 135 from subsection 1 to 7. And now we will discuss some decided case laws. First case law was about the ACOM India Private Limited. So the registrar has, issued the order of penalty pursuant to section 135. Here in the case, the adjudicating officer has imposed the penalty of rupees 12,70,652 on the company, and also rupees 63,533 each on the 2 whole-time directors for short spending of rupees 6,35,326. So which the company came to know upon revised calculation. So here basically the company has spent 65,53,120 on account of CSR during financial year 21-22. Subsequently, the company noticed a calculation error in the obligation, and as per the revised calculation, the spending requirement was 71,88,446, which resulted in an underspending of rupees 6,35,326 towards its CSR obligation for the financial year 21-22. The company came to know about the underspent amount of this 6,35,326 after the expiry of the time limit of 6 months from the end of the financial year, provided in the law for transfer of the unspent amount to the specified fund. Subsequently, the company has transferred that amount, but they have transferred after the timeline. They have transferred that amount on December 9, 2022. Then a show cause notice was issued by the adjudicating authority to the company, and after hearing the party, they levied the penalty. They imposed the penalty of rupees 12,70,000 and 63,533 on each of the two whole-time director. The important thing to note here is no penalty was imposed on the company secretary, being he didn't hold any position in the board.
But he was an officer in default. As a section provides that every officer in default.
Yeah. Yes.
But only thing is that if you see the case law here,
Yeah.
the adjudication authorities are so stringent that despite the fact the company has noticed its mistake, it has transferred the money to the specified fund, no sympathy has been shown, and the amount just double the amount they have imposed as the penal provision, and only courtesy has been shown to the company secretary. That's it. Though, as you rightly said, Amit, he would have been rather penalized as an officer in default, but somehow that he got a soft corner for the company secretary and he absolved him from the responsibility because he is not a member. So this shows the seriousness of the regulators.
Yeah.
In fact, I have not seen this kind of penal provisions which has been imposed upon the adjudicating authority on any other sections.
Correct. Yeah.
Then moving onwards to the second decided case law. So here the company got penalized under section 454 of Companies Act 2013 for violation of the provision of subsection 5 of section 135. Here the regional director of the Southeast region, Ministry of Corporate Affairs, Hyderabad, upheld a penalty of rupees 61,31,744 against FMC Technologies India Private Limited and its directors. The penalty was imposed for company's failure to comply with the provision for the transfer of unspent CSR funds. The case was brought before the RD through an appeal filed by FMC Technologies India Private Limited and its directors. The ROC had earlier issued an adjudication order under section 454 of the Companies Act 2013. Elect violation. The ROC contended that as per section 135(5) of the Companies Act 2013, FMC Technologies was obligated to transfer the unspent CSR amount of rupees 26,65,872 to the funds specified in Schedule 7 within the timeline. So that is on or before 30th September 2021. The company transferred the funds to PM Cares on 10th November 2021. So there was a delay in transfer the unspent amount. Despite this corrective action, a penalty was imposed by the ROC for the alleged violation. Company failed to comply with the provisions given under the subsection 5 of section 135, resulting in the violation. So basically, RD upheld the penalty of rupees 53,31,744 on the company and 2 lakh on each on the 4 directors. So totaling 61,31,744, where the company has to actually transfer the amount of 26,65,872, but they had to pay the penalty for the non-compliance, which is 61,31,744.
You know the real reason behind this, why it was upheld. See, this company is a MNC, and it is one of the parents is in Singapore, the other parent is in the US. And in those countries, the parents comply with all the provisions. They contribute huge amounts towards CSR. But in case of the Indian subsidiary company, the company was found to be in violation. So there was no mercy shown to this company.
Yeah.
Only that mercy not shown, even the maximum penalty has been imposed upon.
Yeah.
I think 3 times if I'm not wrong, the maximum penalty is 3 times the amount not transferred or this thing. So they have imposed the maximum penalty on this.
And FMC is a huge organization. It's a massive organization in the US.
Yeah.
So the third case law, which talks about the violation of the provisions of section 134 read with section 135. The Registrar of Companies in Karnataka has imposed a penalty of 8 lakhs on Ceratizit India Private Limited for failing to disclose the reasons for not spending the CSR amount in its board's report as per the requirement of the Companies Act 2013. The Ministry of Corporate Affairs appointed the adjudicating officer under section 54 of the Act. The case involves Ceratizit India Private Limited, a company incorporated in 1996 under the ROC Karnataka. The company failed to disclose the reason for not spending the CSR amount in the board report during the financial year 2017-18 and 2018-19. The company has subsequently, in the year 2021, spent the entire outstanding CSR amount for the financial years 2017-18 and 2018-19, amounting to rupees 13,19,849 and rupees 14,47,982 respectively. The second proviso of subsection 5 of section 135 states that if a company fails to spend the prescribed CSR amount, the board must specify the reason for not spending the amount in its report. And also subsection 3 of section 134 requires the board's report to include details about the company's policy and actions regarding corporate social responsibility initiatives during the year. So here, the company is penalized with the total 8 lakhs imposed on the company, 6 lakhs and 2 lakhs for the officer in default, managing director and the company secretary, 1 lakh each for the financial years 2017 and 2018-19, as per the section subsection 8 of section 134.
In fact, here the company would have simply revised the, the board's report with the permission of NCLT, and they would have mentioned the reason for not spending. Whereas instead of doing that, what they did was they have transferred the money to the unspent account, or to the specific funds, I think. Am I correct? The only specified funds they have transferred the money.
Yes,
Whereas
sir.
that requirement was not there in those respective years.
Yeah.
Still, the company went and did that. And then the ROC, what he did was he has imposed this penalty and all. What the company would have, according to me, whoever has guided the company, it was a misguidance they given. They would have simply revised the board's report with the permission of NCLT that we have noticed some error in the board's report, something has not been disclosed. NCLT would have given that. After that, they would have got the revised board report adopted by the shareholders and they would have filed it with the ROC. Simple thing. Whereas here, they have lost the money as well as they got even what's called as, got the penalization also.
Yeah, I agree.
Yeah.
Next.
So yeah, so far we can take up more questions. We have discussed the case studies. So
But
we
one
can
thing
take-
is very clear, Dolly, with your the 3-4 case laws what you have mentioned.
Yeah.
The adjudicating authorities are not showing any kind of mercy to the
Yes.
companies who have not complied with section 5 and subsection 5 and 6.
Yeah.
So company secretaries are to be very careful,
Yeah,
and they should be, according to me, take the interpretation conservatively. Don't take any kind of chances, because in all the cases the adjudicating authorities have imposed maximum penalties, 2
yes,
times, 3 times like that. And that, except in one case, they have not spared even the company secretary also.
Yeah.
So sometimes, Amit, I see that handling, acting as a company secretary of a company
Yeah.
is virtually a double-edged sword.
Yeah, particularly in private limited companies. And see, if all the companies that we have seen which have been prosecuted are all private limited companies. In one
Yes,
particular case
correct.
which I read yesterday, the defense raised by the company was that we don't have a company secretary, so we didn't know the provisions.
Who objected them to engage a PCS?
Yeah. Yeah. No, I agree.
In fact,
It's a very dangerous and precarious condition sometimes.
in fact, I say that of late, regulatory activism is so high. Even if you see the smallest of the smallest trivial non-compliances by private limited companies, ROCs are coming very heavily on them.
Yeah.
Especially when I was addressing the webinar on Secretarial Standard 1 and 2, I have brought in so many cases like that. You know, the meeting number has not been mentioned in the minutes, the chairman has not put the date, the paginization has not been done. For all, and similarly, the blank page has not been scrolled off. All these things the companies have been penalized. Yeah, Dipti, take the questions.
I
Yeah,
think there is no more questions.
Oh,
Okay,
okay.
Oh.
Great.
Oh, I just now came. The penalty on the company and officers in default will be paid by the company, and the company will have to record the same from the salary payable to the officers in default.
That depends on the company's policy.
The penalty on the
See,
company
now,
in the
see,
default will
nowadays,
be
you
paid
know,
by. No.
yeah,
Actually, it is to be from the bank account of that concerned employee only. They insist that.
in
Don't
fact,
they?
in some of the adjudication orders, the companies, the ROC is clearly writing that this money has to be deposited by the company
Yeah.
secretary concerned.
So
Okay.
they check that.
And similarly, if I am not wrong, the company should never repay the money, reimburse that money to the company secretary on
Oh.
record, because any kind of penalty is because of the negligence of the person concerned. So there is no question of error of omission or error of doubt. Okay. So neither for the directors nor for the company secretary, the company should reimburse it to them. What is the practical experience? That is all different thing altogether. But legally, they cannot do this. That's what my view is.
No, practically also it is not. I am putting both legally and practically.
Correct.
Yeah. See, the director's insurance policy, the director's liability insurance policy also covers only the civil compensation given by courts and not penalties. So, fortunately, even that doesn't take care of any of these things.
Amit, even in case of D&O policy also, wherever there is a negligence of the company secretary,
Yeah.
penal provisions, D&O policy will not come to your rescue.
Correct.
D&O policy will come to your rescue only when you are not been what's called as penalized, number one. Number two is about what D&O takes care of is only your legal
Civil
expenses.
liability. Absolutely.
Civil liabilities.
Civil liability.
That's
Yeah.
it. Yeah.
No penalties. No, even compounding is not covered.
Correct. Absolutely.
I think with this, there being no question, we can close this session. Thanks, Ms. Garima, for your time and expert comment. Thanks a lot. Thanks, Array. There is one more question. Why this exam last minute? Please advise about the minimum period to be considered for defining on ongoing project.
It is 3 + 1, 4 financial years. The
So that-
financial year in which you are deciding ongoing project, next 3 financial years.
Next 3 financial years. Yeah.
But that's the maximum. There is no minimum. It could be within 1 year also. I mean, that's 6 months also.
Please conduct a session on charity commissioner law, times and regulation. Okay, Dolly, note it down, please. Okay. Now I will wait 1 minute or I will close it. I say that there will be another comment, Mr. Ravi Kumar or anyone. Okay. I think I can close it.
You should give some award for the best question of the session.
Yeah, good suggestion. We'll keep this in mind. I mean, that's a good
I
suggestion.
thought, Amit, you are going to say that who is the best panelist who answered the question. Best panelist.
And Mr.
Yeah, we're all-
Ravi Kumar said that, and I should get that award. Sure, Mr. Ravi Kumar.
Yeah.
Yeah, thanks, Ms. Garima, for your time and expert input. Thanks, Amit, for your time and
Thanks.
knowledge sharing. Thanks a lot.
Thanks, Sudhakar, Garima.
Thank you very much.
Dipti.
Thanks.
Pleasure. It was
Sudhakar.
pleasure. Really enjoyed the session.
Yeah, thanks, Dolly, for your presentation. Thanks, all participants.
Yeah, and thanks to Dolly for the excellent arrangement she did, the way she followed up and prepared and everything. Thanks to her.
Absolutely.
Thank you. Thank you, everyone.
Yeah, bye.
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 Not the